Hello everyone. Today we're going to be talking about a very advanced concept. We're going to be talking about how to master time. Now, I'm sure all of you are going to be expecting a very complex lecture here. So I've managed to dumb it down to only two concepts for you lot. And once you start to implement these two concepts correctly, then you'll be able to time things so unbelievably well that you'll understand when a high or low is going to be put in, and you'll be able to see just before we're going to expand. And that is just to a few candles. Like, you'll be able to tell that we're going to expand within 3 to 5 candles time. So who's ready for this? Now, the two concepts we're going to be talking about are SMT and macros. Now, do not click off the lecture yet, because I'm sure you think that you've heard everything about these two, that you just know everything. No. Believe me, you don't. Because I can almost guarantee you that you're not using SMT correctly. And SMT is one of the most crucial parts inside of my trading, and it should be inside of yours as well. It is so powerful that you do not understand. So then, how do you correctly use SMT? Now, what I'm going to be teaching you here is straight out of my mentorship. Now, I won't be teaching you everything, but I'll be teaching you as much as I can. So, I'm sure on Twitter, if you follow me on Twitter, you've heard me talking about SMT and double confirmation SMT. Now, this is the most powerful concept that you can add into your trading, because once you use this alongside institutional order flow, alongside a point of interest, then there is no reason that your trade shouldn't pan out, because you're alongside order flow and you are going to be reasonably close to that SMR point, and that's what's important. So then, what is double confirmation SMT and how do we use it? Well, these are the things that we will need. First of all, we're going to need a higher time frame SMT. This is to confirm a higher time frame institutional order flow is changing, meaning that we are possibly going to reverse. And then after our higher time frame SMT is present, we then drop down into our lower time frame, as I've just mentioned. Inside of those lower time frames, we are going to be using a lower time frame SMT to confirm the higher time frame CSD. And this SMT is typically found on the leg that forms the breaker. That last expansion leg that forms that breaker. That is the leg that you're looking for that SMT, okay? And then thirdly, entry SMT. Now, I'm not going to explain what it is or how to utilize it, but I am going to show you examples of it. So, if you're smart enough, you'll go back into your charts and you'll kind of start investigating what is entry SMT, because I think entry SMT is a bit too powerful to put on YouTube for the moment. Maybe in the future I'll put it on YouTube or somewhere public. But entry SMT is the concept you use to catch highs and lows to incredible precision. Now, let's get into some examples. As you can see, this is our hourly chart on NQ and ES. This chart over here is NQ. This chart over here is ES. Now, we're going to be looking at this whole move down. Alright? What do you see with this candle and this candle on NQ and ES? What you'll be able to see is there are candle to candle SMT on these two candles right here, right? NQ takes out our previous candle's high. However, ES fails to do so and creates a failure swing. This right here is our higher time frame SMT or a candle to candle SMT, okay? So then what do we do next? We drop down into our lower time frames. Now, this chart is inside of this candle right here. This is our 4 a.m. candle. Okay, we're inside of these candles right here. Somewhere around here is our opening price. And then what you'll be able to see is that we open and then we start to shoot up. Now, if you watch my open high low close lecture, you'll understand why this is of importance. And once you start to understand open high low close with this double confirmation SMT, wow. I mean, your chances are going through the roof at the moment. But anyways, what you're able to see is that this right here is the leg that formed our breaker right here. Okay? This is our final expansion leg up. Now, what you'll be able to see is that NQ retraces, so does ES, and then we start to expand. Where do we expand into? Well, NQ expands above this buy-side liquidity pool right here. However, ES fails to do so. As you can see, ES makes a failure swing. This right here is SMT inside the marketplace, showing you that manipulation has finished and that a CSD is about to unfold. Now, once you start to see this, what is the next thing you're looking for? You're going to be looking for an entry SMT. Now, of course, you don't know what that is yet. So what you're going to be looking for is expansion away from this SMT. As we can see, we start to get this expansion and then we start to retrace. Now here, I've marked out what I call an entry SMT. Now, again, I'll just let you guys figure this out. I'm not going to explain it any further, but all I'm going to say is that this right here is our entry SMT. I'm not going to be explaining what it is, but you can kind of guess what it is from the name, but I'm not going to be saying how to utilize it. That is strictly right. Now, for our second example, this is a trade I took. Now, what you'll be able to see is that our institutional order flow is currently bullish. As you can see, our drawn liquidity is higher and our price is just moving up, right? Making higher highs and higher lows, okay? Now, what you'll be able to see here is that there's a cracking correlation with NQ and ES right here. NQ makes a higher low. However, ES makes a lower low. So NQ is a weaker asset here, and NQ makes our failure swing. This right here confirms to us that there is manipulation ending right here, and it signifies to us that we should now drop into our lower time frames and start to look for SMT on the lower time frames to confirm that CSD for us. Now, what you'll be able to see here is I've marked out 3 different SMTs. Candle to candle SMT here, and then 2 more SMTs leading into this low here. Now, I want you to think, why was this such a high probability setup? Well, I'll tell you now. There were many, many factors leading and telling me that our drawn liquidity is higher and I need to get into a buy position here. And I'll walk you through this now. First of all, up here, this is an intermediate term high. Okay? Now, this high got displaced through, meaning that this right here was our CSD. And as you can see, we formed a BISI along this high. Now that our CSD is in play, and we are now looking for higher prices, what do we now need to do? Well, all of this time distortion is waiting for what? It's waiting for our hourly open. This candle right here was our 4 a.m. open, okay? This black one right here. And it opens and it slams lower. Now, as you can see, this is very similar to our last example where we shorted. Okay, this was our opening candle and we immediately shot up. However, this one, we immediately shot downwards. Now, this is exactly what we're looking for. If we're looking for buys, we need that open low. If we're looking for sells, we need the open high. Okay, very, very simple concept there. But we need to get back on track with the SMTs here. This SMT here confirmed to us that this is a true CSD. Okay, even if we got this huge expansion leg above this high, it would not be a valid CSD without this SMT being here. Now that we know that this is a true CSD, what are we now looking for? We're now looking for our entry SMT. Where's our entry SMT? Down here. Okay? There were no other SMTs on these lows until here. This right here confirmed to us that it's time to buy and expansion is about to take place. As you can see, expansion takes place immediately after. Now, I'll post my execution on X and I'll quickly post a picture of it here. As you can see, I entered inside of this chop because I knew the CSD was already in play and all I was waiting for is the expansion. And as you can see, we've got our SMT here and then we start to expand. So now let's get on to our second portion of the video. How do we use macros? Well, macros are used to reprice quickly and efficiently towards its intended drawn liquidity. So if price hasn't yet reached its drawn liquidity, macros will be used to reprice very rapidly towards that drawn liquidity. Now, I've already made a whole lecture about SMT and macros. So if you haven't already checked that one out, I highly, highly recommend that lecture. But macros are a pretty simple concept to get your head around. And now once you start to pair up SMT and macros, you begin to see how easily it is to anticipate expansions to only a few candles time. Meaning that once the SMT is in play, once macros are lined up with your thoughts and processes, then what you're able to see is that expansion will take place 3 to 5 candles after the SMT is in play. So I want you guys to rewatch this lecture and take notes on everything I've said, because this is probably the most informative lecture I've made on YouTube yet. Because I've made lectures about TAPDA, I've made lectures about open, high, low, close. However, I think that this one is the most informative because this allows you to not only have the price aspect, which is basically your point of interest on the higher time frames. This tells you nearly to the exact point when we are going to reverse. Now, I don't want you to be entering on the closes of SMTs and stuff like that. No, because you're not yet to that level. However, I do want you to wait for that displacement and enter on the confirmation after that SMT is ready in play. That is a high probability setup, and that is when you know that expansion is about to take place. So I hope you guys enjoyed this lecture and learned something new. If you have any other questions, please leave them in the comments. And if you want access to my mentorship, it's linked in the bio and it's called the Time Vault. I'll see you all in there.